Payments traditionally have been a part of banking industry. It's a subset of what we know as banking industry or a financial services industry. Of late, it's been getting the connotation of a payments industry on its own, the respect of being an industry on its own. I don't know if it qualifies for a standalone industry status. However, it is very, very important component of any transaction. And transactions happen at all levels. People transact between themselves. Transact between themselves and businesses. Businesses transact between them amongst themselves, business to business. Businesses transact with governments. Governments transact between governments and governments. So there's a whole wide range when we talk about payments and the nature of payments specific to segments of consumers, businesses, governments, and so on. It still does not qualify as a standalone industry in my view, simply because the payment is an essential component of a underlying commercial transaction. There is a value-added service or a product or an idea or an exchange of goods, materials, or some such goodwill which is exchanged, in return for which there is a commercial value put to it, and that value is what is translated as a payment when it comes to transaction. If you take that into account, it is always an essential component, but an inseparable component of a larger underlying transaction. It is also an inseparable component, therefore, of any banking institution or a financial services segment. To that extent, payment, the industry itself needs to view itself not in isolation, because when you take the payment out of any wholesale transaction, you don't get to fully understand what it stands for. And when you don't get to understand what it stands for, you cannot create value in that industry. So I see payments as a quintessential component of the financial services sector. When you repay a loan, it is a payment. It could be, coming out of a small finance bank. If you withdraw money from an ATM through your from your savings account, it is a payment. The bank is making a payment to you. If you make a payment into your e-wallet, it is a payment into the e-wallet. So payment prevails across various segments. Therefore, it is an extremely important one, but it is not in isolation an important industry to qualify for a separate industry standard. Why is this difference very important? Because when people start talking about the payments industry, the payments landscape, etc., the changes that are coming out in these in this specific segment is arising because of the underlying change in transactions. Digitization is drawing people towards bank accounts. Bank accounts therefore need to modernize their payment landscape. People are going out to work in various parts of the world, so they're sending payments back, which makes it important for financial institutions to start enriching the cross-border payment experience of that customer. If there is someone who is willing to send that money from, say, the Middle East to India, and if there is a very fast and secure way of doing it, rather than carrying it in suitcases, which used to be the case when lesser number of people traveled, it was okay. So you have to take into account what the underlying transaction is, underlying need is. And there, when you add a payment and you add the efficiencies of making that payment or the underlying transaction experience much more fulfilling, is when you start innovating on the payments industry. This is a very important way to understand the payments landscape, and I think the realization has come out, and a lot is happening inside India, in the world at large. I've been seeing the transaction banking space for about a quarter of a century rather, 25 years. And the transaction banking, or what we today call payments industry, was a back office component of large banks. It was an operations cell which made transactions possible. It was never really projected as a business model. The change started when the cash management industry was born within the transaction banking world, within the larger banking segment. And that started making it important for having better solutions, bringing technology into the operationalizing of payments or making it more efficient. These things then started adding value to the transaction itself. A simple innovation that happened several years ago is the outstation checks, which were the only modes of payments, formal payments that the country knew, were made payable at par. Checks need not have to travel to different parts of the country to get cleared, and therefore the underlying commerce could be confirmed much faster. Frauds were taken out of the equation, and the credit terms that came to the buyers and sellers became much more lucrative for them to do the business. These small innovations are all technologically aided innovations, and that means it didn't start with one big massive change in technology. It's a process. So over the several years, we've seen more and more technology come in, more and more process efficiencies creeping in. When we started commercializing the value of this, so if there is a technology company which introduced a way to scan checks and send them to various parts of the country for clearing, then they started creating value, and therefore they started getting paid for that value. Now when you incentivize innovation, it leads you to the next step. If you can scan images of checks between two clearing centers of the Reserve Bank of India, can you not scan checks from the point of origin? Then came the question of why checks? Why don't we, if you're sending digital images, why don't we send digital credits? So this is the way in which over a quarter century I've seen in my lifetime payments evolve from paper-based, cash-based, long tenure transactions to RTGS or IMPS, which operates 24/7. India has taken a big lead with several other developments aiding the payments industry, or what I would call payments landscape, and so it has in other parts of the world, where leapfrogging of existing technology has made it possible to go on to the next level rather than having to evolve stage by stage. So you will see some of the larger countries, more developed nations, struggling still with checks, while India's cleverly and quickly moving over to online payments, e-wallets, even payment banks. I see a great future for the payments landscape. It's definitely in India and across the world. There are a lot of lessons to be learned from outside to benefit the Indian industry, and I'm sure there is a lot of lessons that we can teach the world outside with the kind of stuff that we're doing on the digitization. Overall, I am very optimistic about the industry.